Hi everyone, it's Sean from Pulse Markets here. Today we're having a look at Hastings. I've just bought some shares myself. We're now recommending clients look at purchasing them. I've got Charles Liu, the Executive Chairman of Hastings, with me today. And we're just going to ask a few questions as to who are Hastings, how the company's going. But firstly, welcome Charles, and thanks for coming today.
Thank you, Sean. Very pleased to be invited onto your platform and having the opportunity to share the Hastings stories with your viewers.
Thank you. For our viewers that haven't looked at Hastings before, can you just give us a quick rundown on who you are and what you're trying to achieve?
Sure. So Hastings basically is a mining company that has since 2014 been working on this amazing resource at Yangibana, which is in the Gascoyne of Western Australia. I discovered that resource in the middle of 2014, whereby we've been gifted and really blessed with a very unique ore body with an exceptionally high NdPr to TREO ratio, Nd meaning neodymium and Pr meaning praseodymium. These two minerals, neodymium and praseodymium, are without substitutes and is critically needed for the manufacture of a permanent magnet. And a permanent magnet is a very high performance magnet, which is again no substitute so far for the electric motors that is needed in electric vehicles, as well as wind turbines and your digital devices, and of course, medical, military, industrial robotics. There are many applications of permanent magnets, and NdPr in permanent magnets is still very high in demand, as you can see in the electric vehicle space and the renewable energy, wind energy space as well. And so since the discovery in middle of 2014, we have consistently year in, year out set ourselves the milestones and raised money on the back of the milestones and met the milestones, and then moved on to the next step and the next step. And from 2014 on to where we are today, we basically have brought the project from exploration all the way to the permitting from the WA EPA as well as the Commonwealth, and also the native title agreement that was signed in 2017, and the master supply agreement with a German customer called Schaeffler. They are a tier 1 automotive component manufacturer. And then also we have a binding offtake agreement we signed in April last year with ThyssenKrupp to sell our materials through them. And all the way to construction. We've started on the infrastructure construction on site, and we will be expecting to start the beneficiation plant construction at Yangibana in the later part of this year. So the project, the uniqueness of that ore body of 40% NdPr to TREO ratio puts us right on a world scale, sitting up there as #1 in my view. And there are really, if I looked at all the other ore bodies around the world, there aren't really any ore body that I've come across that will rival Yangibana, simply because we are talking about a tenement area of 650 square kilometers, of which we have only drilled out and defined about 55 square kilometers of it. And within this area that we have defined, it represents about 28 million tons of resource and about 17, 18 million tons of reserves, representing about 15 years, 16 years of mine life. There's obviously a lot more potential. It's a journey that we have embarked on. And as I said earlier, since the very start in 2014 to where we are today, we've raised $273 million for the project. And that is represented by 15 individual capital raises over that period of time. And with each and every one of the capital raise, I have put in my own money and brought in investors, friends and family, of course, and friends of friends, and more latterly with institutions that have come in the last 2 or 3 major capital raises. So today I have about 7% shareholding in the company, and basically I've just followed my money all the way with this project. It's an amazing project.
Well, Charles, that's really impressive. That was a really good rundown. I mean, we always like it when directors are investing alongside investors, and you've certainly done that every single time. You've answered a lot of my questions that I actually had in that rundown on the company. So the resource you've got, obviously one of the questions from one of my shareholders, that can increase. What you've jawed so far, that's not it. You've only drilled a very small component of it, so the resource can grow substantially. Can you just give us a little bit more feedback or a bit more information on the supply and demand dynamics of rare earths and magnets, please?
Yes, yes, indeed, Sean. Currently, when we look at the global picture for magnets manufacturing, it is dominated 80% or thereabouts by the Chinese and about 15-20% by the Japanese. For a long time, because the rare earth production has been taking place and growing in China, the magnet industry has also evolved within China. And today, there's very little permanent magnet production in Europe as well as in North America. Practically, I can say almost non-existent, or maybe just 1%, 2%. What I've done in the last 8 years in this rare earth journey is that in 2016, I spent some time in Japan and in China and in Germany, traveling and talking to potential rare earth customers as well as magnet customers. And it became apparent to me that Europeans, particularly the Germans, were ignoring the importance and significance of the long-term availability of supply of NdPr. Now, if you look at, or you were to Google and look at the supply-demand dynamics, currently there is a marginal shortage of supply of NdPr. Current demand for NdPr oxides a year is sitting around 45,000 tons, and the supply is slightly less than that. And hence, if you look at the price movement of NdPr in the last 12 to 18 months, 2 years, prior to that, it was flat for about, NdPr oxide prices were flat around $50, $40 for 4-5 years. And then at the end of 2020, it started to take off. And in 2021, it went all the way from $70 to about $150, $170 around about the beginning of this year. And when I say dollars, I'm referring to US dollars. So that spike in the, or sharp rise in the commodity price is obviously driven by demand. And the demand that is, where it's coming from is largely in electric vehicles, as we can see with Tesla's sales numbers, and even the Germans like VW and Mercedes and BMWs, their electric vehicle sales are increasing. And of course, areas of digital devices and robotics are also seeing greater demand for permanent magnets. So with that demand happening and happening quite rapidly, the commodities analysts like Woodmac and CRU and Adamas, these are rare earths, or rather I should say these are commodities analysts that specialize in rare earth. They're projecting NdPr prices over the next 10 to 15 years, somewhere in the order of from $120 to even $200, as recently published by Adamas Intelligence. And the reason for that is just basically the fact that demand is going to be much, much stronger than available supply. And supply will take time to come on stream. I'm not saying here for one moment that supply will be constricted forever. All I'm saying is that it takes years to bring a project, a rare earth project, into production. And so what you have is that all the analysts as well as the users of rare earth are expecting to have to pay more for NdPr oxides to make their permanent magnets over the next 5, 6, 7 years, or maybe even longer into 2030, simply because that the supply needed to meet that strong rise in demand. And when I say a strong rise in demand, they're talking about somewhere in the order of 12 to 15% compound annual growth rate for magnets over the next 10 years to 2030. And that, when translated down to NdPr oxides, CRU is expecting a year-on-year compound annual growth of about 8-9% of NdPr oxides demand. So, with these statistics, what it just means is that there is a strong undercurrent, and unless the industry can bring new supply onto the market very quickly, the price will remain strong. And even if new supply comes on very quickly, I know from my recent travels to Europe that with the Russian oil sanctions, there have been numerous wind energy projects that have been funded, which will require wind turbine. For 1 megawatt of a wind turbine, you need 200 plus kilograms of NdPr oxides. And so you can see that, even though there might be more volume coming out, not just from Hastings, but of course, you've got Lynas putting on more volume, and Iluka coming up with their plant as well. And there are others popping up in perhaps of a much lesser volume in South America, or even some in Africa. That demand growth is so significant that it will soak up quite a lot of the supply coming on from 2025, 26, 27 onwards.
Fantastic. That's really comprehensive, Charles. Thank you. I guess one of the key things that we'd be looking at is this project. You've got offtakes, you've got your costs. I think it says December last year. Is there any update on your costs? We've all heard about inflation. We've all heard everything's going up. The price of petrol's through the roof. Everyone would see that. But costs, how are you there?
Okay. So earlier this year, in March, we announced our CapEx review numbers. And this was done on the back of the NAIF financing investment decision that we received from NAIF in February this year. They went through very detailed due diligence on our project, and that required us to obviously review the CapEx in the light of cost increases. So the CapEx number we published is $582 million, and with about 13-14% of contingency added on top, the figure is somewhere in the $660 million CapEx. So that is the number that we are working on, and obviously cost pressures remain very much in the industry. We are not unique. Everybody's faced with the same cost pressures, but we have a very confident that the management team that we have are watching these numbers and pricing very closely. And look, we've got a 2.5 years timeline to build Yangibana, and which is where the beneficiation plant is located, and then closer to the coast, we are building the hydromet plant where we produce our mixed rare earth carbonate, the product that we sell. And this mixed rare earth carbonate of 15,000 tons, right, we will sell to our customers. So we watch the cost over we'll be watching this cost very carefully over the next 2.5 years and we think that prices probably will start to plateau and hopefully even a retreat, particularly in terms of fuel prices. So meanwhile, we are sitting on that 670 million dollar figure, including contingency.
Okay, thank you. With that capex 650 million, I mean, I noticed L1 is a very large shareholder. They just did a nice placement with you, which I think they've invested quite a few times in Hastings. Of that 650 million, how much do you have now in the bank, and what are your options for funding? And can you discuss it, obviously?
Yes, I can give a little bit of color on that question. Firstly, L1 is a long-term shareholder in the company. They first came into Hastings in the February placement last year, and they invested $25 million then and took 7.5% shareholding in the company. In March this year, as we were progressing on our construction, L1 decided to double their stake to 15% and basically invested $40 million. And we gave them an option for about 60 million shares, if my memory serves me correctly, at an exercise price of 32.5 cents. And that was a 2-year option expiring from the date in which they made the recent investment of $40 million, which is about end of March. So we expect, obviously, in 2 years' time, the share price to be way, way above the current share price, and hence they will exercise the option and invest even further. So if you add it all up, and with future capital raises, potentially L1 could well maintain their shareholding, which means to say that they will therefore invest more into Hastings. So in terms of the funding, we, as I said earlier, we've got NAV for the $140 million investment decision. We have for some time been talking to the German state bank KfW, as well as the Norwegian export credit agency called Finvera. Sorry, not Norwegian, but Finland export credit agency called Finvera. And what we're doing with these 3 government agencies is that it is one complete loan package, which is basically a senior loan terms, and there are ongoing discussions for debt funding of $400 million for this senior debt facility with these government agencies. As you can imagine, putting the 3 government agencies together in one loan package and a uniform set of terms and intercreditor negotiations is never going to be easy, but we are pushing along in that direction. However, having said that, it is not lost on management to ensure that we always have a plan B for something as major as project financing. And so we have ongoing discussions as well with alternative financing opportunities that, at the end of the day, my objective and the board as well is to ensure that shareholders will derive long-term value from the capital structure of the company. Now, it goes without saying that if we don't get that capital structure right as we get onto our financing and sign on the dotted line, this will become a burden on the company for the next 5 to 10 years, depending on the tenor of the loan. And so we are very conscious of the fact that we need to get the capital structure right. We need to optimize it, and we need to keep pushing back with the lenders and negotiate for the best terms. And in doing so, you need to have a significant or substantial amount of cash in the balance sheet. And we are very blessed and very thankful to the likes of L1 that has been very supportive, and some of our high net worth long-term shareholders as well. And today, at our last quarterly results announcement, we had $150 million cash in that balance sheet. And that $150 million cash is obviously spent every day. Money is going out of the door to pay for the construction activity, the infrastructure work happening on the ground. So for future funding, as your viewers probably is aware, the project finance typical requirement is that you've got to spend your equity first before you spend your debt. And so we are therefore spending this equity, and we will probably be raising more equity as we develop the long-term vision of Hastings, and therefore coming to the market to raise more equity in future that will be packaged together with a overall debt equity structure that's optimized for the long-term health of the business.
That's excellent. With your investment banking experience, that should be coming in really handy at the moment.
Yes, yes, indeed. I think, you know, certainly coming from a banking background, I've been able to raise money, and on top of that, been able to work very closely with lenders and potential lenders and government agencies to negotiate terms that are ultimately, you know, bring long-term value to shareholders, of which obviously I'm a significant shareholder myself.
Excellent. One thing that you did recently, there's a couple, but the consolidation, I've had quite a few questions on that, just the optics around it. What was the logic to do that share consolidation?
Okay, we have done multiple roadshows with our brokers like Canaccord, and with each of these roadshows we've done in the last 12, 18 months, we have had fund managers and some brokers saying to us that when you're trading at below US $1 a share, the Americans regard us as a penny stock. No matter how attractive you are, it's a penny stock. And being a penny stock, you are effectively not on their radar because their mandate does not allow them to invest in penny stocks. And so we found that many of these large funds, which has these condition on their, you know, this particular condition on their mandate, is being excluded from, you know, from an opportunity to invest in Hastings. And so after a lot of deliberation and a lot of discussion with the brokers and a few fund managers we've met, and also at the board level, it was just felt that as the company grows, and prior to this recent last 2 months where the markets sold off very aggressively, we were sitting at a market cap close on $600 million, and we see ourselves obviously growing bigger and bigger, and therefore having more appeal to many investors in, you know, particularly the large cap funds and in North America, and in some of them in the UK as well. And so the consolidation exercise was felt to be necessary to increase market appeal to investors, as well as also to ensure the fact that we positioned ourselves for that growth spurt that we are looking to as we get ourselves into FID as well as into production.
Excellent. That makes a lot of sense. It's a lot of logic there. Are there any other comments, like the price catalyst for the next 12 months for investors to start buying shares today? Can you give them any urgency as to why we should be buying now?
I can only say, Sean, what is in the public domain, and what is not in the public domain is also keeping me extremely busy. But I think for investors and your viewers, you've got to look at the management track record of Hastings. So I bring shareholders and investors and your viewers back to the time in 2014 when we first started, and when nobody wanted to talk about rare earth because Lynas had multiple problems then, and Molycorp went bankrupt. And I have kept my head down and focused on building a management team that is committed to bringing this God-gifted, amazing ore body, right? And when I say God, I refer to God of the Bible and speaking as a Christian. And the Lord has blessed us with this amazing ore body. And I feel it very much as the responsibility of myself, as well as my board members and management, to bring this product into production at the time whereby we have the right product in the right place and also at the right time, because of the significant opportunity in electric vehicles requiring permanent magnets and wind turbines, robotics, and et cetera, et cetera. And so the management has progressed the project over the last 8 years. And in 2014, when I first started, Hastings was one amongst maybe 60 to 80 rare earth projects, deposits in the world. And I was quite shocked actually when I attended my first rare earth conference in 2014 that there were so many wannabes. But nonetheless, we really have this unique ore body, and the obstacles that has been overcome over the years to bring it to where we are, which is fully permitted, and construction has started. And if you look at all the rare earth junior miners, no one come close to Hastings in terms of the amount of cash in the balance sheet to execute on the project. So we will continue to deliver on the project in terms of the construction of the Benny plant and the hydromet plant. However, it is not lost on Hastings for sure that we need to look at what is the next chapter of Hastings, the next lab. And that next lab is going to be downstream. And to cut a long story short, I have been looking at downstream opportunities in various parts of the world. And in the last 3 months, we are working towards a very exciting opportunity that we probably in the next 3 to 6 months, certainly progressively, we will be coming out with news where we are headed in terms of our downstream activity. And we will obviously have to raise money for this downstream venture. And it will put us right in the, in the forefront of the rare earth mining space, as well as in the mine to magnets story that we are working on, the concept. So there is a lot coming in the pipeline that we are working on, and until we've got the got them into a well-defined stage, and also at the point of having contracts signed, we can't say much more other than that.
Okay, so that looks good. So the near-term price catalyst, so update on financing, the spot price of the end product. I think your valuation is based on almost half of what that current value is at the moment. I've seen Macquarie's valuation; they've got you at $8 after the share consolidation. So it's an exciting time. So thank you so much for your time today, Charles. It's been really interesting listening to you and your vision for Hastings, and we wish you all the success in the future. We'll certainly be watching.
Thank you very much, Sean, and thank you all to all your viewers for this short clip.
Thanks.
Thank you. Bye-bye.